Welcome to the True North Compliance Podcast, where we discuss regulatory and compliance issues for Canadian business.
Hello, I'm Shawn O'Hara, and thanks for listening.
Hello, everybody. My guest today is Lauren Knight, who is an award-winning mortgage broker with TMG, the Mortgage Group, Inc., here in Victoria, BC. Lauren has over 13 years of experience and a reputation for exceptional client care. Known for her empathy and professionalism, she helps clients feel heard, supported, and confident throughout the mortgage process. Outside of her mortgage business, she enjoys fitness, fashion, and spending time with her son. Welcome, Lauren. So please tell me, what does a mortgage broker do?
Hi, Shawn. Thank you so much for having me. Yes, so a mortgage broker is someone who will help you obtain financing if you want to purchase a home, if you have an existing mortgage. And we work very similar to, a regular financial institution. We meet with our clients, we take full applications, and then at that point, the point of my job is to find the best mortgage product for my client, and shop around their application and see if I can, ideally get them the best rate, the best product, and get them into their home or fund the new mortgage that they want.
So how do your services differ from using a bank? Like, why shouldn't I just go to my bank for a mortgage?
That's a great question. So it differs in that if you go see someone at your bank, they are limited to that particular institution's policies. So it's one set of policy that they must follow, and there's one product available. Within each bank, there might be different types of mortgages, different rates and terms, but ultimately they are restricted to only what they offer. And while that can work for some people, it doesn't work for every client situation. So with a broker, we have access to not only the banks, we have access to what's called a monoline lender, and that is an institution that only deals in mortgages. So for example, they wouldn't have checking accounts, RSPs, they only offer mortgages, and those are only obtainable through a mortgage broker. And then we also can access the credit unions as well. So on my end, I'm not restricted to just one lender or one set of policies. And because every client has their own unique situation, I might need to go to an institution that has more flexible, say, example, calculation of rental income, or would potentially look at self-employed income differently than somewhere else. So with these many options, I can provide more solutions to the client and get them the financing they might need where they might get declined at their bank.
Do you gather this information about people and then bring it to the different lenders to say, what can you do?
Yeah, so what I would do with that initial meeting and the initial application is I have a complete picture of the client situation. And part of my job is I don't need to take it to different lenders. I've already, spent many, years learning these different lender policies. And so that more information I have about each lender and policy that I've retained, I can then think, okay, this client would go really well with this lender, or this situation would really work at this monoline lender. So I'm not taking a client application and farming it out to every single lender that have access to, but I'm taking that application and knowing by looking at it, okay, what is going to be the best option for this client? And then I approach the lender that way.
Which means you might only be approaching one lender.
Absolutely, because if there's something very particular about a file, there might only be, out of, say, for example, 20 lenders, there could only be one lender that will handle that particular situation the way I need it to the client's benefit. So because I know this, I'm only going to be approaching that lender. There also might then be, say, three different options. Then I would sort of narrow it down. Okay, well, who out of those three has, for example, the lowest rate? Or if we have a very tight timeline, who do I know of those three lenders that has really quick service in their turnaround times? Um, who do I know, of those three lenders who can fund this really quickly on a tight timeline? So that's one, once I sort of narrow down the lenders, then I think, well, what is still going to keep continually be the best choice for the client and narrow it down further that way.
From the lender's perspective, then, when they get a call from a mortgage broker, they know it's if they're happy with it, it's pretty much, I guess, a done deal. It's not like they're competing with other lenders.
They they in general know they're competing because every time a broker brings a file to them, they do want that mortgage. And there are times where I might phone a lender and say, "Hey, here's a situation. How would you treat, for example, this income?" And they might say, "Oh, we'll treat it this way." I'm like, "Okay, well, I'm competing with the client's existing bank. Can you make an exception to this?" So that's sort of how, so that it's not necessarily a done deal with that lender, but I'm working with them to make it work so they do get the mortgage. It's frowned upon to just farm out a file to multiple lenders and submit to every single lender that because they're investing their staff and time and resources into reviewing a file, reviewing an application, setting aside money for this client. And so if I'm sending it to multiple lenders, it's frowned upon. So I do try to really make sure if I'm taking a file to a lender, I'm going to ideally stick with that lender. However, if something happens where they maybe don't, perhaps they'll say that, yes, we'll make this exception, and they don't, then I may have to move the file. Ultimately, I'm doing what's best for the client, but I still want to maintain that relationship with the lender, be known as someone who follows through and doesn't shop a deal out consistently over and over and do a bunch of cancellations, if that makes sense.
Yeah, it does. Are these lenders, I guess, nameless, faceless in the background?
The big one, like with banks, like I can mention TD or Scotia, and everybody knows who that is. If someone's never worked with a mortgage broker before, they may not know when I mentioned First National Financial or RMG Mortgages, but these are huge, huge financial institutions that have a long history of mortgage lending within Canada. So people may not be aware of them, but they're massive institutions that have been around for a long time. And for example, First National Financial, one of their main investors is TD Bank. So people might not have ever heard of them, but they're still, highly reputable places to get a mortgage from. Once you've worked with a broker, you start to hear these lender names more and more and become more familiar with them.
From what I understand, when a bank is struggling, they may start to call in mortgages, which can affect people who've gotten their mortgage. Is that less likely if they're using a lender compared to a bank?
I feel in my time in this industry, I have never encountered this situation where a bank or a lender is struggling. What happens, first of all, if you look at quarterly reports of banks, these are billion-dollar profits that these corporations are making. There's no struggle for them. And then, so for example, let's say a monoline lender, what happens is they are just sold and another lender or bank will buy them. That is what has happened and what can be common. There's really no, I've never seen there be a risk to a client or have heard in the press or the media any of these lenders calling back their mortgages. It is, um, highly regulated, and it's not, I feel like this is something that potentially could happen in the States, but here I've never seen that happen. And these sales of these lenders happen fairly commonly, but it's of no disruption to the client. We often get, a press release just saying, here's your existing client, this is the information they'll receive, it's business as usual.
Great. That's a great lead into the regulations. Because I know mortgage brokers have been regulated since, at least in BC, since 1972 under the Mortgage Brokers Act. And Since November 2019, they've been regulated by the BC Financial Services Authority. So, and you were in business when that happened. Did you notice much change when BCFSA started regulating?
No, I was trying to rack my brain if I could even remember noticing any change at all, which I don't. To me, it feels like it's always been BCFSA at this point, and I don't feel anything changed of note.
Just very smooth.
Yes.
The
Yeah.
letterhead, maybe,
Yeah,
right?
exactly.
And then I was checking when FinTrack began regulating because I knew it was last year, and they
Yeah.
began regulating. So FinTrack is the Financial Transactions and Reports Analysis Center of Canada. It's a topic that comes up quite a bit on this podcast. And they deal with anti money laundering and anti terrorist financing obligations under the Proceeds of Crime and Terrorist Financing Act. Anyway, they began regulating mortgage brokers in October 11th, which is actually 9 months today, as of this recording. Anyway, it's exactly 9 months since FinTrack started regulating mortgage brokers. Is that would you call it a happy anniversary or a commemoration? Like, has anything changed? Has it been good or bad for your business?
Yes, so things did change, and I would say in a good way. At the time when these notices of the new regulations coming into effect, it felt very overwhelming because these, it's a lot of verbiage that just to the regular person, including a broker, it is confusing. It doesn't make sense. And it is a change, and, change in general for people is, not always ideal. But I do think it's been really great. And of course, I agree with like anti money laundering and anti terrorist financing. But what I've found is it's been a fairly smooth transition. We did training. I'm very fortunate with the mortgage group that they provide all the brokers within the brokerage very in depth training on this. And what I've found is for the client, they don't notice much. There's additional compliance forms that they have to sign, and there's additional compliance forms that I have to fill out. And what it's really done is I need these forms signed by the client before I provide them with any actual information that's tailored to them personally. And so I find that that's an extra step where I can tell if the client is, serious and really does want to, start the process, or if they're just sort of gathering information and maybe not interested in working with me personally. So it's just nice to know that there's that little extra step, and if they're willing to do it, great. If they're not, well, then I'll just wait until they do want to move forward and are serious about doing so.
That's a good point. So it almost
Yes.
weeds them out or maybe self selects. They realize I'm signing this. This is serious. Do I really want to go ahead with this?
Yeah, and it's just an investment. Like I spend a lot of time providing scenarios for my clients, and that's fine. That is what I do. But if someone's not even willing to take literally 1 minute to sign a compliance form, perhaps we're not the best fit, and that's helped show that. Um, and then honestly, with these forms as well, especially now in this digital day and age, when I get an inquiry just really out of the blue, say from Google or whatnot, I have no idea who that person is, and I need to be careful. I don't want to get into a situation where I'm helping the wrong person, and so these are just those extra steps that help prevent that from happening.
Great. Are there any common compliance challenges that you face? Like, how do you make your clients feel more comfortable?
I think what's really important as a broker and what I like to explain to clients is that these forms are standardized. Sometimes people feel like they're being personally focused on, and it's not the case. Everyone has to sign the same forms. It has nothing to do with them personally. Sometimes when I say, "Hey, can you sign this form saying that you are or not a politically exposed person?" they feel like they've somehow been singled out, and they have not been. So I just try to make it very clear, like, this is very standard, this is very common, there's nothing wrong. This is just standard procedure. So feel free to move forward, and and then once you've signed that, we can move forward.
This is probably the first time they've heard the concept of politically exposed person.
Yes, or when I even, for example, request bank statements for a down payment, they may not understand why I need full bank statements and 3 months. And when I explain, well, it's anti-money laundering, some people can get offended by that. And I just have to go that extra step and preemptively, ideally, and explain this is standard for every single client, for every single file. You're not being singled out. This 3 months is just to prove a savings history and there's no money laundering happening.
I could see people being bothered by.
Yes. Even people who, for example, have not done financing in a long time, many years, the rules have changed quite drastically. So it feels to them, well, I didn't have to do that last time. What's going on? Or it feels like it's overkill. And again, I just have to remind them this is very standard now. This is nothing to do with your file individually. It's just these are the rules, the policies we have to follow, and we need them to move forward.
I'm on a mailing list for FinTrack, and every week and sometimes multiple times there are updates that they send about cases that they've been involved in, which means this is not just a bureaucracy and rules for the sake of rules. They're actually quite active in what they're doing and enforcing.
Yeah, I feel like it's going to depend a little bit more on where you live. I feel like this would be more of an issue perhaps in like a larger urban center back east. And then sort of depending on the type of clientele you might have, or say if you're dealing with really large sums of money, it would be more of an issue. Or I would say I would have issues come up more in those situations.
Right. And FinTrack, as they identify a potential issue like terrorism financing or money laundering, they will start to identify an issue in an industry, then they will make steps to regulate that industry. That's why they're
Yes.
now, I think, around 16 different industries, which is interesting to watch. It's like they're not one step ahead, they're one step behind because
Yeah.
some, like now mortgage brokers, armored cars were also regulated around in last year. So they've identified an issue and now they're taking steps to control it. And now those who were committing these offenses will now need to find another industry. And then there's always this lag. So, which is interesting evolution there.
Yeah, that's a good point because I feel like the opportunity for the money laundering and whatnot has become a little bit less, yeah, less opportunistic. Like it's so we're so regulated now, and there's been so many rules that have come in. Even having like foreign buyers, they can't buy here anymore right now. So yeah, I feel like you're right about the lag.
Yeah, we'll see how that progresses. That compliance discussion is always fascinating for me. So I have a question too. Are all mortgage brokers the same? Like, do they have the same licensing or certification, or how do they differ? And how does somebody select one over another?
Yeah, that's a great question. So I can answer that two ways, being yes and no. So we do have all the same licensing and certifications. That's correct. And in general, we do have access to all the same lenders and products. There's a few exceptions to that, and that might be for another question. But are we all the same? No, in that our experience will be very different and our personalities will be very different. So I feel like if you're a client looking for a broker, I would take the aspect of we have access to all the same rates. That's what people are really motivated and driven by. So if you remove that, then I think what it comes down to is the experience and the personality. And in my case, I've been doing this for a really long time. I've worked with, hundreds of clients. I've worked on every different type of financing situation that you can even think of, and even more than that, which really lends to me being able to solve a problem for a client and ultimately get them the approval, which is the goal. And then it also comes down to service. It's, you know, we make our own hours. We but we decide, like, do you want a broker who's going to answer the phone every time you call, who replies to your emails in a timely fashion? What about when you speak to them? Do they explain what's going on? Do they explain the process? Do they explain that clearly in a way that makes sense? Do they have time for you? It really comes down to your comfort level with that person. And so I feel like that's something that does set me apart, is not only experience, but I try to provide really amazing service. So at the end of the, you can call it a transaction, but at the end of the file, or at the end of our working relationship, that this person, has feels like they have a really good understanding of what has happened, and feels like we may not be friends, but have a friendly person in their corner who's been helping them with this process. Financing can be so stressful and so overwhelming for people. And I think you need someone in your corner who's going to take that away and make it as, smooth and seamless and as comfortable as they possibly can.
Are you able to put across those differences in your marketing and promoting of yourself?
In a way, I don't do a ton of traditional marketing, but I find that in my process of working with a client, by the end of it, I really do get a lot of positive feedback on how they've enjoyed the process, or how, thanking me for making it easy for them, or that they've really appreciated, everything I've done for them. And then in that sense, I know that they do refer me to their, friends and family, and that is the marketing right there for me. It's that word of mouth referral of saying, we worked with Lauren, she was amazing, you should talk to her. Um, so in that regard, that's how it's working for my marketing. If you look at my Google reviews, or on my Instagram, some of my reviews, I would say that the general theme or phrasing is very similar, in that I've made it a nice, a good experience for people.
From something that could be very stressful.
Yes, and
Is
it can be, and I really try to reduce that for my clients.
Because it ties in with the stress of buying a house, which is one of the
Yes, it's
most stressful.
absolutely a very stressful time for people.
Good. And you're able to keep people calm.
I do get that feedback that I have a calming presence for people, and I think that is another thing that differentiates brokers from one another, is there is a lot going on behind the scenes that can be not smooth, that can be very challenging and very stressful. For me, the client does not need to know that ever. I work really hard to make sure that the realtors I'm working with, that the lawyers that I'm working with, understand that if some sort of issue comes up with, financing with the property, when we're almost at funding, that they reach out to me and never the client. If I can deal with the problem without the client ever knowing, then that is what I would like. The client does not need to take that on. It's not their job, that's my job, and I don't want them being upset or worried or concerned for any reason if it's not necessary.
You have emergencies in your business?
I do. I do. Um, there Again, there can be emergencies, and I don't want the client to know about them. They don't need to. It's twofold. There can either be an emergency, for example, before we remove financing conditions on a purchase. The other thing that's common is there can be an emergency right before funding through the lawyer. In both situations, what makes it an emergency is usually timing. There is a time crunch and a timeline, and that's what makes it the emergency. And it's going to be up to me to resolve that issue with either the lender or the lawyer, or all three, or both. I'm trying to think of an example that would illustrate that. I've had a recent one where at the lawyer's phoning me because I'm representing the buyer, and the seller might not have enough proceeds to clear their title, and therefore the transaction can't go through, and therefore my client does not have their house at the end of the day on their completion date or funding date. So there's things like that. I've had it where right before trying to remove a financing condition, perhaps an appraisal has come in on the final day of our financing, and there might be an issue with the property. And so I have to get that resolved as quickly as possible. So there's lots of things behind the scenes that the client may never be aware of that I am dealing with. It's what keeps my job interesting, I guess you could say.
That's neat. What made you get into this? Like, what do you love about it?
Well, I got into it by accident. It was not intentional. I was in a completely different field of work. I was a makeup artist. And so when I got into the job, I was an administrator to a mortgage broker, and I had absolutely no idea what was going on. I didn't know what amortization was. I didn't know what a mortgage term was. I didn't know anything. And to be honest, I did not find it interesting. And it really just to me was I wanted a 9 to 5 job because before that I was a makeup artist working variable hours every weekend, every holiday. But as I learned more and my responsibilities increased, I found I really love this job. And what I love about it is it really is, it comes down to problem solving. And every single file and every single client is different. And it really is about solving problems and getting the best situation for a client. And so it's always challenging, it's always interesting. The job itself, the point of the job might be the same, getting a mortgage for someone, but getting to that end goal of the mortgage is different all the time. And the problem solving is great because it's a numbers game and math is math and the numbers work or they don't, but there's still different ways to make those numbers work. And then ultimately you bring in that human component, and these are people, and this is a huge financial transaction for them. It's their livelihood, it's this big event in their lives, and I love being part of that, and I love helping people get to that end goal, especially someone who say has faced a lot of hurdles in getting financing. For example, like I've had clients who've faced bankruptcy or who've gone through a separation, and getting that financing feels like such a lofty goal that they're never going to attain, and finding a way to make it work for those people is very rewarding.
Is there a fee for using your services?
Almost always, no, there is not. There are some situations where that might be the case, but for traditional mortgage financing, no, there is no fee. The client does not pay me. The lender pays me if the mortgage funds with them and only when it funds. An instance where there would be a fee for my services is when we need to use private financing, but that is something I know very quickly in a conversation with a client, and that is communicated very clearly to them before they move forward. And the thing that's also nice about that is even if there is a fee, it's only ever payable again if the mortgage funds. They're never walking away without their financing and still having to pay me. And that even goes with a lender fee as well, because that sometimes can happen in the event of private financing. And it's payable at the lawyer signing. And those numbers are very clearly communicated right out of the gate to the client. No surprises.
So if somebody's renting now and wants to buy, what who should they see first, or what should they do? Should they go find a piece of property? Should they talk to a mortgage broker?
Well, what typically happens actually is people will reach out to a realtor first. And then what happens is the realtor will send them to me. I know it, I feel like it seems like it would make more sense to reach out to a broker first, but often it is the other way around, and that's okay. And they come to me, and then at that point, I can take their application and then give them some guidelines. I can pre approve them or pre qualify them and say, here's your information, here's your maximum purchase price. And now you can tell this to your realtor, and now you can comfortably go shopping and feel comfortable that you can write an offer on a property if you find one. Otherwise, if they do it the other way around, they may be looking at things that are really out of their reach price range in terms of price range, and there can be disappointment there. Or they can afford more than they think, and then they can start expanding their search.
That's neat. So if people want to use your services, what information do you need to know about them?
I need to know quite a bit about a client. And by that, I need, all their personal details in terms of like who they are, date of birth, where they live. I need a 3 year address history. I need a 3 year employment history. And I do have to pull credit. We do need a full list of assets. And the credit is a big one. And yeah, the living history and the job history is necessary. And within those components, I can take an application, you give me your information, but then what has to happen is it all has to be verified. So that's where I would need, for example, if you're self-employed, I'm going to need 2 years of your tax returns and notice of assessments. Or if you're a salaried employee, I'm going to need a job letter, a pay stub, and likely one annual income document, such as a T4 slip. If there's a purchase involved, I'm going to need your down payment history. So I mentioned previously 3 months of bank statements. And then with your credit, that's something that we pull. We pull a credit report. There's the history there. I don't need any documentation other than your permission for that. And then if you're someone who owns multiple properties, I need, for example, a mortgage statement, property tax bill, and confirmation of strata fees if applicable for each property. So right now it feels like it can be quite document heavy when you need to get financing. But again, this is standard for every file. You're not going to be asked for things that your bank wouldn't ask you for or that another broker wouldn't ask you for. It's all standardized and it's all necessary. But one thing I do like to highlight for people, especially with down payment, is they get a little uncomfortable that we're going to review their bank statements and maybe there's things they don't want us to see. But in my case, I've been doing this so long, and even when I was new at this, we're not scrutinizing, we're not criticizing, we're not looking at your daily spending habits. I'm truly scanning your bank statements for large deposits that might not make sense for who you are. If there's $10,000 going in your account every 2 weeks and you only make 40 grand a year, that's something I'm going to look into further. I'm not looking or judging, and neither is the lender if you go to Subway every single day for lunch. Those are things we just don't look at. And then, for example, I was working with a client recently and, she said, "Oh, what's my credit score?" I'm like, "I don't remember. I'm not in front of my desk. I know it was really good." So these are the details about people, although you're providing very sensitive personal information, it's strictly reviewing it for policy and is it going to work with the lender? And then I really don't retain it. It's all confidential information anyway. I just think people feel a little bit sensitive that I might know this, but really it's not being scrutinized in any way against someone personally. It's just policy.
What does it mean to pull credit?
So pulling credit is we typically, and by we I mean brokers and lenders, will be working with Equifax and we're going to look at your credit score. And what that will be is a report that shows a history of who you are financially. So it's going to list any credit cards or any sort of liability that you have, a line of credit, if you have a car loan, a car lease, student loans, mortgages are sometimes on there, even your cell phone bill, and it goes back as far as it's available. And what we're looking for is your repayment history. And what it is, the term credit worthiness might come up, and it's just to show the lender, hey, this person has 3 credit cards, and look, they've had these 3 credit cards for 6 years and they've never missed a payment. And so it's really just proving to the lender that you're going to repay your mortgage. So if they're going to lend you several $100,000, they want to know that you have a good credit history.
Neat. That's great. Thank you. This has been very informative. How can
Thank
people
you.
reach you, Lauren?
They can reach me either directly through email, lauren.knight@mortgagegroup.com. All my contact information is on my website, which is knightmortgages.com, and that's Knight with a K, or directly through my phone line, 250-507-5947.
And can I put all that into the show notes?
Absolutely.
Great. Thank you for.
Okay, thank you so much.
And that's a wrap.